This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
It's great to have your company here on Business Now. Well, look, let's get across the weekend's auction results. And around the country, it was relatively busy. Almost 2,250 auctions and a clearance rate, you can see here, just a bit over 63%. Touch lower, but there's a reason for that. In Sydney, there were 806 auctions. The clearance rate here, a little lower, 58.6%. But there are also another 1,700 or so private sales. Across Melbourne, 963 auctions, and there looks to be recovery here. The clearance rate you can see is 70.5%. In Brisbane, just 75 auctions and 46.7% sold. So really quiet in Brisbane. Another 1,100 private sales across Queensland. In Adelaide, 83 auctions, still strong here, above 78%, and also another 250 private sales. And in Canberra, 57 auctions, 75% of those were sold, plus 140 private sales. So let's bring in here Eleanor, the senior economist at RBA Group. Eleanor, thanks for your time. Just you can't help but say that there is a coincidence with rates being cut, large number of properties hitting the market, and especially in Melbourne, you could see the auction clearance rate pick up.
Certainly, we've seen that auction clearance rates have strengthened relative to the period we saw into the end of last year and the end of the spring selling season, where auction clearance rates had really started to decline quite significantly in those major capital cities like Sydney and Melbourne, where we typically see a lot of auctions are held. And certainly, I think we are seeing that in February, the prospect of interest rates moving lower, so many people were expecting this move lower from the RBA last week, and of course now the actual eventuality of interest rates moving lower has certainly seen auction clearance rates lifting throughout February and this past weekend as well, with that sentiment boost and confidence hit to the housing market that lower interest rates brings.
And of course, the interesting thing about this is interest rates affect affordability. That's one of the keys, the key ways in which the Reserve Bank can move behaviour of people in our community. The question is whether people are now anticipating 2 or 3 rate cuts as they're out there bidding at auctions and bidding at private sales.
Look, I think that's certainly a factor. We know that one rate cut in and of itself doesn't make a huge difference to people's hip pockets when it comes to the savings for those already with a mortgage, and of course the increase in borrowing capacities for those potential home buyers and that kind of slight improvement to affordability. But it is the expectation of further interest rate cuts towards the end of the year. And of course, I think the sentiment boost as well, which is the key channel through which this easing that we've begun to see in February is going to affect the housing market. So it looks like those small price falls we were seeing in December and January are likely to be pretty short-lived, with most potential home buyers likely now receiving a confidence boost, sentiment boost, with interest rates having begun to move lower and that slight improvement to affordability kicking in, although it certainly must be noted that affordability still remains incredibly challenged. And given that very stretched starting point for affordability, the price uplift that we'll see as a result of the current easing cycle is probably going to be a bit more modest than we've seen in previous easing cycles.
It's going to be interesting to watch it. And also, of course, it was Melbourne where there's been more distressed sales than anywhere else that really did see the big uplift as well. Eleanor Creagh from the RBA Group, always good to chat to you. Many thanks for your time.